What's going on, guys? Extremely excited to finally get you this video on the system. I've been talking about it all week on my Twitter. I've been using the system to trade for months now. Now, I'll start by giving credit to @MasterBJones on Twitter. That's Trader B Jones. He's the original creator of the system. He's the one that sort of pioneered the system movement. I've adopted it myself in order to trade options, and it has completely changed my trading for the better. So my goal is to teach you guys how to trade options using the system. So let's get into it. Let's get into the setup. What you're going to want to do is pull up the SPX 30-minute chart with no extended hours included. You're going to want to pull up the 50 SMA, which in the case of my chart is this blue line. And you're going to want to pull up the 10 SMA, which in the case of my chart is this green line. Very simple. SPX 30-minute chart, no extended hours included, 50 SMA, and 10 SMA. All right, guys, let's get into key concept number one, the buy signal. The buy signal is simply when the 10 SMA crosses above the 50 SMA. We see here the green line crossing above the blue line, which is our signal that momentum is shifting in the market and that the bulls are gaining control. So short-term momentum has shifted from bearish to bullish, aka indicating a buy signal. Key concept number two, we have the sell signal. The sell signal, very similar to the buy signal, is simply a bearish cross of the 10 SMA below the 50 SMA. Again, this is our indication that momentum has shifted from short-term bullish to short-term bearish when we see this bearish cross of the 10 SMA below the 50 SMA. Key concept number three, the 50 SMA can serve as support and resistance. When we are trading above the 50 SMA, we consider it to be strong support. As you can see on the chart here, we saw the 50 SMA serve as support 1, 2, 3 times. So anytime we're trading above it and we pull back to the 50 SMA, we're expecting it to serve as support until proven otherwise. Now, similar to how the 50 SMA serves as support when we're trading above it, anytime we are trading below it, we expect it to serve as resistance until proven otherwise. Take a look at what happens here. Once we break down below the 50 SMA, we see it serve as resistance here. Resistance here. Okay? So as we approach that 50 SMA and it's in a downward angle, we're expecting it to serve as resistance. Key concept number four is the 10 SMA as support and resistance. Now, the 10 SMA is not as strong as the 50 SMA, so the way I like to think about it is it serves as a guide for trend. We can see how price rode the 10 SMA on this move higher, but it didn't bounce perfectly at points, right? So when I look at the 10 SMA as support, I'm thinking, okay, it's likely that buyers step in once we come down to that 10 SMA, but I'm not necessarily taking trades on it because I don't have as much trust in it as I do the 50 SMA. Very similar story here. We see the 10 SMA serving as resistance. On this move lower, we popped to the 10 SMA and sold off again, but then we see how later on we broke through it, okay? So again, I'm not as confident taking trades off of the 10 SMA. It's simply a guide for trend, but important to understand that it can serve as support and resistance. All right, now let's get into key concepts that you must know in order to properly trade using the system. First, we're going to talk about support and resistance. The more often a level of support is tested, the weaker it becomes, and that goes for the moving averages, okay? So let's take a look at what happens here at the 50 SMA. We saw it get tested as support once, twice, 3 times. Now, as a trader, I need to become skeptical that this level of support or this moving average is becoming weaker, okay? Now look what happens on the 4th test of the 50 SMA. We broke down. So just because the theory or the thought process is whenever we're trading above the 50 SMA, we want it to serve as support, you still need to be on your toes and you need to be analyzing price action and understanding that the more often a level of support and resistance is tested, the weaker it can become. Now, this same concept goes for the 10 SMA, okay? And this same concept goes for when we're using the 50 SMA as resistance, 10 SMA as resistance, 10 SMA as support. Just a general concept that you must understand that the more often a level of support or a moving average that is serving as support or a moving average that is serving as resistance is tested, the weaker it will become. All right, so let's get into how I actually trade options using the system. So the system is obviously a 30-minute chart. Now, if you're trading near-dated options, we'll say anything expiring within 30 days, we know that intraday price action can have a large effect on those options premiums. So to take trades solely based off of a 30-minute chart may not be the best idea. In my case, I use the 30-minute chart along with a 5-minute chart. So all my trades need to make sense on both time frames. So depending on that lower time frame you're using, maybe you're using the 1 minute, 3 minute, 5, 10, 15, etc. The concept to understand is that the 30-minute chart will tell you short-term trends, but that lower time frame chart will help you get the best entries. Okay, so how do I know which options contracts to choose when I trade options using the system? So I'm always trading SPY. I'm using SPY as my vehicle to trade SPX. So we have the SPX 30-minute chart, right? I don't trade the SPX options. I prefer to trade SPY. That's SPY. Now, when picking the options contracts, I always like to go with contracts that have at least 4 days until expiration, at least. The reason is, think about the 30-minute chart, right? It's giving us short-term trend. It's telling us the short-term trend, what it's likely to be. It's telling us that shift in momentum. Now, if I'm choosing 0 DTE options contracts, I'm not really helping myself out because that's not how the system works. It works on a little bit of a larger time frame. So I like at least 4 days until expiration on those contracts. Now, when I add a trade, I like to think of it as a swing trade. So I like to carry the trade overnight. So oftentimes what that means is that I'll take a starter position on that first add. Going back to the concept of support and resistance, I like to add as close as I can to support or as close as I can to resistance. So let's say I want to jump the gun a little bit because I got a buy signal and the 5-minute chart looks good and I'm confident that we're going to trade higher on the day. Well, I can be confident, but I don't want to get overconfident and get stopped out of the position when, 3 days down the line, SPX trades way higher, but I got stopped out because I didn't give myself room to add. So the concept here is I add the starter position, let's say half of the amount of contracts that I want, and I can add the second half on a dip to that 50 SMA support. Because remember, 50 SMA serves as strong support. Now, if it doesn't hold as support, I would cut the position at a loss. So the same concept goes for playing puts, right? So let's say I get that sell signal and I want to add puts right on the sell signal, knowing that realistically my best risk versus reward is the 50 SMA. Now, there's no guarantee that we trade back up to the 50 SMA, so if I jump the gun, I want to make sure that I'm taking only half-size positions. So again, if we trade lower right away, I make money. If we pull back and we go to test the 50 SMA as resistance, I can add the second half of my position there, and then I know if we break through the 50 SMA and it doesn't serve as resistance, I can simply cut at a loss. So my risk reward is great for adding in that area. Or if I add in that area and we reject as I would expect, then I would also have a winning trade. All right, the last point to cover here, choosing the right strike price, okay? I want to go at least 5 points out of the money, but no greater than 10 points out of the money. If you take a look and you look at history, right, go through that SPX 30-minute chart. Take a look at the system, see how it moves, become familiar with it. You'll see that a lot of the times you get some really strong moves post-buy signal or post-sell signal. So in order to take advantage of those moves, again, I like to swing contracts overnight, and I like to play a run that can last several days. And the best way to take advantage of that is by going out of the money, okay? You don't want to limit yourself by going too close to the money, and you don't want to get way too aggressive by going way out of the money. So I have found that between that 5 to 10 strikes out of the money range is where I've really been able to be nice and profitable. All right, guys, I hope that you enjoyed this video on how I use the system to trade options. This is what I would consider an introductory version of what it is that I do. I try to condense what's most important into this video. If you guys are interested, however, we recently did a Kane Capital bootcamp where I spent nearly 3 hours covering the system and what it is that I do on a daily basis in order to use it to trade options. As I mentioned earlier in the video, I also use the 5-minute chart, which is equally as important as the 30-minute. During that boot camp and during my sessions, I talked about what it is exactly that I look for on the 5-minute chart. We also have 7 other head traders that spent hours and hours detailing what it is that they do to be successful trading. And if you guys are familiar with Kane Cap, you know that we got quite the team. So if that's something that you guys are interested in, again, shoot me a DM on my Twitter at Dwyane Trade 3, and I can help you guys get those recordings. Again, thank you so much for tuning into this video. If you liked it, make sure to hit the like button, subscribe to our YouTube channel, and I'll catch you guys on the next video.